You know, a lot of people don't really realize from the business end what unclaimed property is. A lot of people think it's real property. It's actually cash and it's money. There's no real property involved in it. And you know, staff has done a great job the last few years, and twice now we did not have enough money to pay claims towards the end of the fiscal year. We went from returning about $25 million a year to 50, and this year we set a record at $70 million. So I really paid attention, and Kitty and her staff has done a wonderful job. And I would tell you, they probably rank very highly in the country in outcomes. And that's where we concentrated to improve our outcomes. But along the way, as we're improving our outcomes, we've had different folks come into the agency and sort of sharpshoot where we can improve. And one of those areas were withholders and businesses that should be returning money to the state and really don't realize they're supposed to. So that's what today's seminar or webinar is designed to do, is really educate, because we're only collecting about 8% of the money that we should be collecting for a state our size and for the amount of claims that we're doing. So anyway, I appreciate the staff time that went in this. I appreciate the Chambers of Commerce and the bankers for helping promote the webinar.
So picking up kind of where we left off, we had just gotten started, but Kathleen was mentioning the business requirements of reporting. Mr. Treasurer just got into that a little bit. And the short answer is compliance. In a nutshell, if a holder who possesses, quote, abandoned property, which of course is a term of art on behalf of an apparent owner, that property, and it meets the requisite dormancy period, they've held it for that long, they're required to report. So yeah, so on this one, basically, as Michelle stated, the materials will be provided. So there are some statutes listed in there that you can reference on your own time. There are some important questions that are answered in these. So for instance, when is property abandoned? You would want to consult 9:154. Which state has custody? 156 addresses that. What does the report have to include? 159 addresses that. How is the property actually transferred? That's addressed in 160.
Perfect. And I got ahead of myself, but can you explain why we have these laws in every state and who benefits from the process of collecting unclaimed property?
So first of all, owners benefit. The most important aspect of unclaimed property is consumer protection. The state has custody, but not ownership. The state provides a central location for owners to search, and there's no time limit for making a claim. Secondly, holders benefit. The liability is removed from your books and transferred to the state, and the holder is indemnified. And thirdly, all citizens benefit from the state having use of the money until it's claimed. Historically, the money was spent in the state's budget. And as Treasurer Schroeder mentioned, there were a couple of times that we were actually short on being able to pay claims. So last year, the legislature created and the voters passed the Unclaimed Property Trust Fund. And beginning July 1st of 21, the money will be protected for the future, creating investment earnings for the state.
Kitty, can you talk about some common misconceptions people have about unclaimed property?
Sure. The first misconception is that a company doesn't have any unclaimed property. The reality is that almost all companies do. If a company is paying wages, issuing checks, or maintaining customer accounts, there is the potential for unclaimed property. The second misconception is that unclaimed property is voluntary. In reality, it's not voluntary. And Brandon will explain some ramifications of non-compliance.
Thanks, Kathleen. So I won't go through all the details, but Title 9:176 is the statute that addresses interest and penalties. It sets out an interest rate that's provided in Title 13. That's the judicial interest rate. It also addresses other per day penalties. The important takeaway that we really want to stress is in Section E, and that is regardless of what the particular penalty or situation is, the administrator has the full authority and discretion to waive any penalties. And to my knowledge, I don't believe under this Treasurer's administration we've assessed any interest and penalties. So that is a complete discretionary item, the entire topic of interest and penalties.
Yes, that's correct. Thank you, Brandon. Under Treasurer Schroeder, we have not assessed any interest or penalties for a voluntary report. We just want holders to do the right thing and be in compliance. We don't want to penalize someone if you file a catch-up report that includes some late property. As long as it's voluntary, we just want companies to be in compliance so that we can return this money to the individuals.
And just one more comment. That's a great point that Kathleen just made, and we can't stress that enough. It is not a gotcha statute. We're not in the business to try and assess interest and penalties. It's actually the inverse of that. If a holder voluntarily reports, in a nutshell, we're going to do all we can to assist them in completion of transfer of that property, et cetera. We are not looking to assess interest and penalties.
Thank you, Brandon. The third misconception is that your organization is only required to report to your home state. The reality is property should be reported to the state of the owner's last known address, and a holder is required to comply with the laws of the state where the property should be reported.
Okay, so now we're going to go over what you should be doing as a business or as a holder.
The first step is to identify the potential unclaimed property. Research your records regularly for any liabilities or obligations on your books that have been outstanding for a period of time with no activity or contact from the owner. These are items that could eventually become unclaimed property. The next step is to determine which state has jurisdiction. Property is reportable to the state of the owner's last known address. If the address of the owner is unknown, it goes to the holder's state of domicile, and state laws are very different. So it's important that you identify the property early in the process and determine the appropriate state, because you may be dealing with a short dormancy period. For example, many states have a 1-year dormancy for payroll. The next step is to know the laws of the reporting state. The National Association of Unclaimed Property Administrators, which we call NAUPA for short, and you will hear that term again later in the presentation. NAUPA has a website with links to all of the states. So you should visit unclaimed.org if you need to navigate to other states' websites to find out what your responsibilities are. Now I'd like to turn it over to Gail Horton to talk about dormancy periods.
Okay, the next step is to determine the dormancy period or the holding period. How long has the property has been held before being presumed abandoned is set forth in the statute Title 9, Section 154. Here are some of the examples of dormancy periods. Please note that utility deposits and wages are held for 1 year. Oil and royalties are held for 2 years, and that includes stock and dividends, which are 3 years. 5 years is the most common holding period. Bank accounts and most types of checks are held 5 years. And the generic all other property is also 5 years.
How do you know when the dormancy period begins?
Well, it's easy to know if we're talking about an outstanding check. Obviously, the date of the check. For bank accounts or customer accounts, it's the date of the last owner-generated activity.
Okay, what do you mean by activity? Can you explain that?
The date of the last customer-generated activity would be like a deposit or withdrawal, obviously, an ACH transaction that was authorized by the account owner, accessing of a deposit account through a restricted access portal, or a documented phone call. So for example, if you are a bank and you have a portal that your customers can access using a user ID and password, and you keep track of that, that counts as activity when they access by the password. If they call you and you have a system in place of documenting the phone call, that can count as activity.
Okay, and we're getting a little background noise, so if you're not actually participating right now by talking, can you please mute yourselves just so everybody can hear? Are there actions that do not count as activity?
Yes, there are. An automatic action like crediting of dividends or interest is not considered activity. Neither are unrelated charges or payment, undocumented phone conversations, or phone calls with a third party. Now, Brandon is going to explain about why return mail, or rather the lack of return mail, is very important.
Thank you, Kathleen. Yes, this is for all intents and purposes the trigger or precondition that you want to focus on, which is returned mail as undeliverable. In a perfect world sort of business practice sense, you hope the organization, the banking or financial institution, has some sort of regular tracking of mail. That is to say, when they receive notices of mail being undeliverable, that is critical in the context of unclaimed property. When the mail is returned as undeliverable, for our intents and purposes, that equates to abandoned property. Another important point as a banking or financial institution is that once that statement to a regular customer has been returned officially as undeliverable, you can immediately report that. That is not something that has to wait. If that is your customer and the regular statement has been returned as undeliverable, that is immediately reportable.
Okay, so I have a question. What if an account was not reported because of statements being mailed? What happens if a statement is returned by the post office at a later date?
Yeah, I think Brandon covered that a little bit, but this question comes up a lot. Sometimes holders want to start the clock over when they have returned mail, but the date of last activity did not change. The last activity on the account stays the same. So that account should be reported the next time you file a report in the next November report cycle. So the next step is to perform your due diligence. The law requires a notice be sent to the owner prior to reporting. And Brandon is going to explain the legal requirements of due diligence.
Thank you. Sorry, everyone. That's correct, Kathleen. We're really talking about the notice requirement. Few key points. This applies to items that are $50 or greater. With regard to the notice that you are sending, it must be sent not less than 60 nor more than 120 days before reporting. It's a little window there. Here's a critical tip that applies to some banking and financial institutions to remember. If you've already been notified, that is to say, that you've been alerted for whatever reason that the property is abandoned, well, then at that point, you do not need to send that notice. And the significance comes in the sense that if you're sending out thousands of notices, you're a large organization, it becomes a bottom line issue. If for all those notices, let's say 100, you don't have to send out because you've already received that notice and you don't have to notify them. That's some money that can be saved. So that's the final point I wanted to make on that slide. But just remember, if you've already been notified as an institution, that notice requirement is not required.
So here are some tips for effective due diligence. I think the most important thing is to get their attention. Send out a letter in an envelope that looks very similar to thousands of pieces of mail that the bank or financial institution sends out every year. I know I get tons of mail from my bank. Make it a different color envelope. Put language on the envelope to get their attention, like, action required. Hear about what action they need to take and provide a contact phone number. This is a sample of a good outreach letter. I'm not going to read it all, but you will have a copy of the slides afterwards. You can see that it does have a telephone number that is very visible and prominent in the letter. We ask politely that if you're going to give your customers our contact number, you put that information further down in the letter, because tons of calls every year from people when they get the due diligence letter. They look to it quickly for a phone number, and if the first number they see is us, they're going to call us. So, we prefer that holder take care of that and reactivate account or return money before they even before it gets to us. So let's say you've removed the items and you are now ready to prepare your report. Gail, you want to unmute and take this?
Okay, the last step is to prepare and submit your report. And we require an electronic file of the NAUPA format, the standard file format. There are many vendors providing unclaimed property software. And if you have an IT staff and decide to use your own program, a copy of the NAUPA file format is available on our website.
Okay, great. And I know it's a Wednesday, guys, and we're throwing a lot of information at you. More than halfway done, so not much longer to go. Why do we need electronic reports?
Mainly it's for security reasons of personal information on your report. Uploading a file through our secure website portal is much safer than sending paper reports through the mail. Our employees never touch the data. That's a big security benefit, and also eliminates the chance of human error. The reports load into our system seamlessly, and if everything matches up, the items are available for claims within days.
That's great information. Let's talk about data. What information must be included?
We need as much information as you have on the item. The amount, the account number, the type of property. Clearly identify the owner. Think about the future. When a person comes forward, how are we going to prove ownership? Owner relationship codes are very important. They are used to identify the relationship on accounts with more than one owner and determine how we will pay. For example, an account listed John and Mary will be handled differently than one just listed John or Mary. We will provide a list of the property type codes and owner relationship codes to everyone. Social security numbers are critical, and Brandon will explain about that later.
Brandon?
Hey, thanks a lot, Gail. Yeah, as she stated, the best rule of thumb from a holder's perspective with regard to reporting to the state is give as much information as possible. The end game is to connect that owner with the property, so any information you have is helpful. But what 159 does address, and we want to point out here, is that contents that shall be included, and that's mandatory, is the social security number or employee identification number, whichever one applies in terms of an entity or an individual. That last part says, if readily ascertainable. My only comment on that is, generally speaking, a banking or financial institution is going to have that baseline information. However, the law states if readily ascertainable. If there's some rare instance, for some reason, the holder is not in possession of the social security number or EIN information, then it would be not readily ascertainable.
Thank you, Brandon. Yeah, we interpret that language, if readily ascertainable, to mean if you have it, you have to give it to us.
Right.
So I want to call attention to the question of interest-bearing account. The NAUPA file format has a place to designate whether an item is interest-bearing, yes or no, and to provide the interest rate. The Unclaimed Property Department is required by law to pay interest on an interest-bearing property whenever we would pay a claim in the future. So we rely on holders to provide us that information. If you don't tell us something is interest-bearing, you don't provide that rate, we have no way of knowing that. And those customers in the future will not get interest on their property. Now, Brandon will explain about how we are verifying that the holder has addressed that question.
Thank you, Kathleen. And that's exactly correct. One of the most helpful tips that we can provide is to know on your radar that if you are dealing with interest-bearing property, primarily an interest-bearing account, that is a different animal. This particular verification is pretty self-explanatory, but the point is an additional verification that makes crystal clear whether or not the item is interest-bearing or not. And lastly, I'll just comment, as Kitty alluded to, some folks may or may not be aware, but this is a very sort of stringent legal concept, which is judicial interest and other items, which is where an item bears interest and then it is forwarded to the state. There's a pretty strict process where we have to mathematically, account for how that interest is being accrued and things of that nature. So again, kind of closing on this slide, this is an additional verification that applies to the interest-bearing items. So as a reporter, always note if the property is interest-bearing, that's a different animal.
Yeah, thank you, Brandon. And this, what's on your screen is the verification that comes from our paper reports. But if you file your report online and upload, we are capturing an electronic signature where you are still confirming this official verification of report.
And that's a great point. I may just real quickly comment on that. And this is more generic. The world is going to paperless. So if any of you all have any kind of question that relates to what if I physically, sign the paper and mail it in, or what if I do an online report, that is absolutely no difference in terms of if it's an electronic signature or physical signature. So let's go ahead and get that out of the way. Back to you all.
Okay, Gail?
Okay, your NAUPA file is done and you are ready to send your report in. And we have some screenshots of where to find the secure file delivery portal on our website. Click the Unclaimed Property button on this page first. Then on the next page, you will see the button that says Reporting Property. And that brings you up to a drop-down menu, and you click to submit the report. And at that point, you have the option to upload your electronic report, or if you have a small report, we have a feature that allows you to manually enter your data. We accept checks or wire payments, and there's a portal on our website to pay via ACH after you have uploaded your report. To pay online, you go back to the drop-down menu, and you select Submit a Payment. You will have to enter your tax ID, and our system will locate your report.
All right, that brings back to me. Less than 10 slides to go. A lot of mistakes made in reporting. Can you talk about common errors?
As she said, the two categories of errors are, first of all, these are the things that will prevent our system from accepting your report. It will be rejected online if it's not the right format, if there are records with blank owner names, if they're missing a date of transaction, invalid owner relationship codes, or invalid property type codes. And as Gail said earlier, we are providing everyone with a list of the property type codes and owner relationship codes. You should have received that by email this morning. The second issue is data issues that won't actually cause the report to reject, but we will discover it later in the process when we go to load those reports. Missing critical data, for example, social security numbers, last known addresses. We do have a warning feature built into our system when we load a report. If it's missing a social on a type of property where you would normally expect to see a social, like a bank account or wages, we'll get a warning flag on that, and we may reach out to you and ask you for that data. Incomplete owner names always, give us issues. If you designate individuals or businesses incorrectly, incorrect owner relationships are probably the biggest headache that we have that causes us difficulty maybe years down the road when we can't figure out how to pay a claim. And we also see occasionally data in the wrong fields. And since we are doing good on time, I'm going to take just a few minutes to tell a story of something that happened to one of my colleagues in another state. The holder completed a report and they put the social security number in the address field. So that report came in electronically. Their system was similar to ours. They're not touching holder data. They didn't have any mechanism to catch that, and that got displayed on their website. So that, I mean, it was pretty significant breach, but it was caused because the holder put socials in an address field. So, I mean, we ask everyone to please keep in mind the information you provide us will affect whether that person will ever be able to claim their money in the future.
All right, Kitty, do you have any advice on best practices? What are your suggestions for holders?
Well, we prepared some tips for a sound unclaimed property program. You should have detailed written procedures. I've been in this job a long time, and I've heard many times the person who was doing this left, and I have no idea where to start. We've often joked, it seems like the newest person on the job is the one who's given unclaimed property reporting to handle. Also, you really need strong dual controls. Unclaimed property is an area where internal fraud may happen simply because dormant accounts or outstanding checks may be targeted because no one is looking for the money. Be sure you have dual controls in place. Keep track of changes in the laws. Provide all of the required information. You know, as I say, think of these items as a real person out there, and we really want to be able to find them in the future and connect them with their property. Use the correct codes. As I said, we're going to send you a list of that. Review your reports thoroughly. Check your list for known individuals. We had an occasion one time where a gentleman was very angry because we had his money, and one of my colleagues wanted to give him the name of the bank. So, you know, because he was angry, and he said, I know who to contact at that bank. I'm the president of that bank. So just a quick review of the names on your list. You may see someone, a name that jumps out at you. Be sure the amount on the report and the amount of the payment match. Gail can attest to that. We do get a lot of reports every year where amounts don't match up, and we have to go back to the holder and try to figure out what's up. Provide a contact name of who is the best person able to answer questions about the report. And that may not be the authorized signer. If you have like a vice president who's authorized to sign, we don't necessarily need his name as the contact person.
So what if the deadline is approaching and a holder needs more time?
We will gladly grant an extension. The due date provided in the statute is before November 1st. So that's, you know, actually October 31st is the deadline. All we need from you is a letter requesting an extension. We will grant either 30, 60, or 90 days extension for pretty much any reason you give us. Changes in technology, changes in personnel, natural disasters. We are very lenient in allowing you extra time.
Are there situations where a holder might need to request money back from the state?
Yes, there are two scenarios where the state will return the money to the holder. The first is if the item was reported in error. This could be that you discover that a check had been voided and reissued, or it was determined that the payee was not even entitled, or maybe you did a review of your records and found some items had been reported that were not really old enough. Those are the kind of things where you can tell us that it was just a mistake, reported in error, and we'll return it to you. The second scenario is, what if you paid us money and the person collected from you also? We will reimburse you if an item cleared your account after being remitted, or if you choose to pay the customer. And that happens a lot when a holder wants to maintain a good customer relationship. A person comes into the bank or whatever and finds out their money is gone. You can return the money to the owner and request we reimburse you. If you do that, we ask that you call us first. We can, first of all, confirm that we do still have the money, because it could very well be that we had already paid it out. And we can also flag it that you are paying the customer to make sure a payment to the customer doesn't happen in the meantime. In the handouts that I emailed this morning, there is a form for holder reimbursement, and that form is also available on our website. And the last thing I want to talk about briefly is your company can have money owed to you. We pay a lot of claims to businesses every year. So we ask you to please go to our website and search online for money for your business or for yourself.
I'm going to bring the treasurer back to say a few final words, and then we will open it up to questions if you have any.
Yes.
Okay, everybody, again, thank the Chamber of Commerce, Brandon, for their work. I do want to say this is the law. And again, we have not, we have really not pursued it because we've been so worried about our outcomes. And now as we focus to this, the law also says that there's penalties and interest. We've never filed or charged anybody interest and for not filing. We want to work with you. We want to be your partners. Look, ultimately, I think y'all's goal is our goal. We want to get this money to the owners and to the heirs. And now we recently got $258,000. It was a CD that was lost for 18 years to a homeless man in New Orleans. So we want to work with you. We're not necessarily here to work against you. We're not the unclaimed property police. We want to educate the businesses and the holders and work with them so we can have a better program for the citizens of Louisiana. So again, I thank the staff and I thank everybody for participating today.
Mr. Treasurer, anybody have questions?
I see one in the box that came in really early. The question is, we drilled a safe deposit box which contained foreign currency. How do we handle this for as cheap? So our statute covers intangible property found in a safe deposit box. And I know at times that could be a judgment call when you're looking at coins, whether that's collectible. If coins are collectible in nature, that is not considered intangible. We don't want you to cash that in. If it's just regular old cash, what we want you to send us from a safe deposit box is anything that you can just deposit and include in your check pay. And that would also include foreign currency. If it's not collectible in nature, you would need to do the exchange and include that in the payment of your report.
Great question. Anybody else?
There's a question, are we required to send the due diligence letter prior to sending abandoned funds? Yes, the answer is yes. You are required to send a letter if the item is $50 or more, and providing that you have not already recognized the address as being undeliverable. So if you've had undeliverable mail already, you do not have to send that final notice. But yes, you are required to send the letter.
All right, if you're shy about speaking up and you have a question, just give us a call. Our number is 225-342-0010. That's 225-342-0010, and we'll be happy to help you out. Kitty,
Yes.
just say a few final words.
Thank you, Michelle. Yes, I sent an email this morning to everyone who had pre-registered for this event, and I gave you all the property codes, a copy of the slide deck, a complete copy of the law. I also gave you all contact information for myself, Brandon, and Gail. So just reach out to us with any of your questions, and thank you for joining us today.